Hi, welcome back. Today it's Tuesday, July 7th, 2026, and today was a risk-off day for the headline indices, but not a full market crash. The S&P slipped, the Nasdaq got hit harder, small caps were weak, TLT sold off too, so we didn't even get a clean safety bid in bonds. The main pressure was still coming from AI and semiconductors, with QQQ down hard and SPY weak, while the Dow held up a bit better. Let's check out some of the standout trades and stories and things to watch from today. Feel free to jump ahead to specific sections that interest you using the video markers. Quick disclaimer, this is not financial advice, this is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. The sector tape was a real story today. Technology was the clear loser with XLK and SMH down hard and semis and AI hardware continuing to unwind. Industrials were also weak and consumer discretionary was slightly red, but communication services held green and more defensive areas actually caught a bit. Healthcare, utility, staples, real estate, and energy were all up. So this was not a sell everything. It was another rotation day. Money came out of the crowded AI hardware and moved into energy, defensive healthcare, and parts of the market that had been less loved. And let's give a big shout out to Meta and some of the software names from today. On the macro side, the big data today was the U.S. trade deficit, which widened sharply to $77.6 billion in May as imports rose and exports fell. That matters because it can weigh on GDP tracking, but it can also show companies are still importing heavily, especially around capital goods and AI-related investment. The market is also waiting for the Fed minutes tomorrow, which is really important, which were probably going to be the biggest macro event of the week. The question is whether the Fed sounds more concerned about inflation and rates or whether last week's softer job data gives the market enough room to keep pricing a softer landing. The big stock story today was still chips. Samsung reported very strong results, but the market sold the news because expectations were already sky high. And investors are starting to question whether the AI hardware trade has gotten overowned. Micron, SanDisk, and other chip names were hit. And the pressure also came from reports that DeepSeek is working on its own AI chip, which raises competitive concerns for the existing AI supply chain. SpaceX officially joined the Nasdaq 100 today, but the stock fell sharply instead of ripping on inclusion, which is a good reminder that the index inclusion can be priced in before the actual event. Oil, if we pull up USO over here. Oil also moved higher on renewed Strait of Hormuz concerns, which matters because energy strength and oil inflation can complicate the Fed narrative. And there's a lot more news going on in the after hours, right, about the Iran conflict. Now let's jump into the main tickers and trades I've been watching today. And if you haven't already, please subscribe. It really helps the channel. Also leave a comment with the tickers you want me to cover next. And let me know whether you want the chart, the macro setup, the fundamentals, the GEX, the option flow, support and resistance, or the trade architecture. I'm going to keep the market recap shorter so we can spend more time where it actually matters, the trade setups. All right, so let's go to Meta. I'm going to be off script here and just go through what happened today, but it was a pretty glorious day for Meta. They essentially launched a AI image generation model on Instagram, or at least they announced it, but I think it may be in there. I haven't played with it yet. But if you've been watching this channel, you know we're highly allocated to Meta long, 140 shares in this long-term holding portfolio. I have calls on it. I've sold some cash secure puts down below current price and have leveraged ETFs all over the place because we believe in the fundamentals. I've done a few videos on that. You can check that out. And we also like the price action. So I won't cover how we got into it necessarily, but let's talk about what happened today. So there's been a big rotation or at least there's been a handoff, like a seesaw, if you will, between chips and the hyperscalers and software. So the days that chips are down, software and hyperscalers tend to be recovering and vice versa. And so that started out that's how the day started out. We had this great pop overnight. We were right around 600 and we were really happy yesterday that we held that. We talked about some of the fibs that we liked. And then we gapped up over that, which was really nice, came back down into the gap. And then thereafter, right around here, I don't know what time that was, maybe 11, 12 o'clock. We got the news about the AI image generation. It shot back up after that, and it held most of that. I'll go through and we'll see how much of that move it gave back. It gave back less than 50, right around 50 to 60% of that move. So it's holding up nicely. And mind you, this is after previous news that happened with them selling back some compute, which was this fib right here. I like to do it from the bottom. You can see it was probably right here. Because that was the swing of it, which is where I like to do it because it's usually an indication of where the people who have more information than you started to get into the trade, as long as it's relatively local. And so when we judge it from here to there, we're really now in the upper bounds of this fib retracement. We continued back into it today. So I really like to see acceptance like this holding. And that's on the 4-hour. If we look at it on the 1 hour, see what else we can get, we can start to understand that we came up into R1 to start the day. We came back down to it. And when we got that news, we popped back up. We went over R2. I started taking some profits at that point because I didn't see R3 in our future for the day based on GEX, which brings me now to the GEX for it. So this is a snapshot that I took sometime in the middle of the day. actually before that pop that happened. And you could see right here, this was the 620 mark. And that's when I started taking some profits there. We came back down into the 615 and it's holding nicely. And one of the things that we could take away from the GEX is that for the rest of the month, which is this reading right here, the 650 strike is huge. And you have this kind of terraced GEX, if you will, positive call walls. And so that usually starts to skew us to the upside. I like that a lot. And I could see us marching towards 650 towards the end of the month. I don't think it's going to blast off right away, but we're starting to see some acceptance there. And I think a lot of people who got shaken out, like we were talking about down here, are going to start closing some of that. However, I am starting to see a little bit of resistance right at this 625. Every time we come into it, it gets sold back down. And that's probably because a lot of the people who got in around here are starting to cut some of their losses as it rebounds. So you should kind of expect that. This has been oscillating for a while. But one thing I do like to point out here is this kind of funky head and shoulder, inverted head and shoulders, where you have the head here, you have a shoulder here and a shoulder here. And the thing that I like about it is this line. This is we've talked about this before, regression channels here, the linear regression channels. This line right here is the mean. So think of it like a trend line over the course of the last 52 days, because I'm on the daily. And that's kind of forming our neckline right there. And when you have a downsloping neckline on the inverted head and shoulders and break above it, it tends to be very strong. That's the actual angle of the neckline that I like to see. So that wraps it up for Meta. All right, so today I'm going to cover software as a theme, and I'm going to do that through Microsoft, CRM, and ServiceNow, because I think there are some differences. Some perform better than others. Microsoft was up 0.54% today, but what I didn't love about it, but also where I see a lot of room for us to continue to grow before a true pullback, is the fact that we didn't leave the daily super trend here. We're still in a downtrend. However, I mentioned yesterday, one of the greatest things was that we finally got above the 20 simple moving average on the daily. And so that was the first thing we really needed to reclaim. And like I've said in a number of videos, I don't see a moving average reclaimed until you have a close above it, followed by a red day, followed by a green day. Now, granted, this was a green day, but it was a red candle. And what that tells me is that there was a lot of selling pressure here. Essentially, we gapped up, continued higher, and then came back down. So selling pressure dominated today. You can actually see that in my volume bars. I have that kind of ratio being shown in the volume, and it was a lesser volume. So to see selling with lesser volume and still see a a green day, but a red candle, tells me that this isn't the worst thing in the world. And I can expect to some degree some more upside, at least given the pattern that we've seen. But what I haven't noticed is a break above this downtrend. And so that's what I'm looking for, because if we look at Meta, which we just covered, you can see that it has broken out of its most recent downtrend. But Microsoft hasn't done that. But if you look at ServiceNow, for example, it actually finally broke out of its daily trend. And it had a similar day where it's a red candle, but it was up big today, 2.59%. And at one point in the day, it was up even more. It was a pretty glorious day. Took some profits on it, but haven't closed my position on it. Whereas ServiceNow, similar to Microsoft, where we have this daily downtrend still being the upper bounds. And the funny part about these super trends are that a lot of times that upper line acts as resistance there because of the way that it's calculated. So it wasn't odd to hit resistance there. Plus, we're hitting a fib there. And again, this is on ServiceNow, and I am, Salesforce, pardon me. I'm highly allocated to this as well. Whereas on ServiceNow, like I said, we did break above that line and we got above a fib. So this looks a bit stronger to me. There was a lot of news coming out today about ServiceNow that was quite bullish, although sometimes I have to watch that stuff because I feel like there's a lot of bullish sentiment in the news when bigger players are thinking about getting out, and there's a lot of bearish sentiment when they're thinking about getting in. That's just a contrarian signal that I'm always looking for, especially with RSI divergence. So like right back here when we saw a lot of negative news coming in, but RSI was actually saying maybe this isn't as bad as we think it is. There could be some accumulation happening here, and that tended to be true. Now we've reclaimed this level and we're up a level here. So ServiceNow is the best looking of all of those. But for Microsoft, I'm still quite bullish. You can see this account has 160 long-term shares. I also have cash secured puts below it. I'm holding quite a few of those actually, because I'd love to get assigned more, because I don't think this is just going to skyrocket, but towards the end of the year, I think it's looking very compelling. I've done a video on Microsoft's financial outlook. Their fundamentals are just wonderful, and they don't really need to do too much to be valued at a much higher multiple than they currently are by the market. Um, but on the 4 hour, we're holding this uptrend very nicely. And of course, you need to reclaim trend after trend. And we reclaimed the 1 hour a while ago back here. It oscillated. We reclaimed it. It oscillated. And then we reclaimed the 4 hour. And what I really loved about that 4 hour, which we claimed almost the exact same time as the 1 hour, because we had that big, massive pop up. And those gap ups are one of the best things because you kind of blast through resistance very easily, and everybody who's trapped then starts chasing it. So, that short covering and that localized short squeeze is always really great. So the trend on the smaller time frame does look intact, and on the 1 hour and the 4 hour, it's pretty good, but the daily needs a little more work. But for me, the way that I'd be playing this is looking at tomorrow's pivot points. So if we come back down to, I would assume to some degree that we're coming back down to 380 if we have a bad day. Remember, there was a lot of whale activity around 383, 382. So it wouldn't be odd to come back to this 383. And you can see that's the pivot point S2 for tomorrow. So I'm really going to be looking at that level to either add some exposure or maybe sell some more cash secured puts below it, which I guess is still adding exposure. But that's going to be a place that's not going to freak me out. And also 375 is not going to freak me out either. But what I do want to see is some reclaim of this daily before I can say that it's going to be in a definitive uptrend that I feel pretty great about it. However, an interesting part on the weekly here is that we did reclaim the weekly a super trend to the upside. And that was because of what happened a few weeks ago when we broke this upper trend and we haven't lost the lower end of it. So this always looked like a liquidity sweep to me down here. And I'm still playing it as such. Plus, of course, we had mentioned a number of times, and if you watch some of my other videos, this RSI divergence, which occurred right at that sweep there, which is another reason I really did think this was a liquidity sweep. So anyway, that type of thinking continues for CRM, ServiceNow, and Microsoft. And I will say keep watching SMH because SMH is kind of on the other end of this seesaw. So there could be a little bit of a near-term recovery for SMH. It did put in a nice wick down there, but I'm not entirely sure that's going to hold. But I'll be watching that in conjunction with Microsoft to see how it's going. I kind of expect some chop, especially as things are going on in the Middle East and as we get the Fed minutes tomorrow. All right, so that's a real quick recap for today and just two different trades, Meta and then the Microsoft and other software complex trades. The main message is simple though for today. This was not a broad panic, but it's still another warning shot for the crowded AI hardware. The market is getting more selective, macro still matters, and tomorrow's Fed minutes could decide whether this rotation keeps broadening or whether tech pressure gets worse. Thanks so much for watching, happy investing, and stay safe out there.